Hello everybody, welcome to a fresh Tesla update video. And what is going on? Let us thus review Tesla stock today as normal, of course with results on Tesla stock. Let's review what is happening to the stock, and consider what we could expect moving ahead to close off the week, and move into what could be a quite significant week next week. Coming out on January 29 could thus be a quite hot day one way or the other, but let us discuss it. If you thus liked the video, remember not to overlook the like button. This is not recommendations on finances, I am not a financial counselor. Of course, if you love my technical study, my ideas on the charts, etc. I do update my members every single day the market is open, so they always get it first. Again, as the market is trading, continuously providing them updates when naturally required, or something of course worth updating. For simply $3 a month, mostly on Tesla stocks, occasionally other stocks if I find chances, or for $5 a month you get upgraded to the second tier, where you receive, clearly, everything in the first tier as you mentioned, plus, Nvidia daily updates if naturally interested. But jumping into a Tesla closing today down a tiny 0.66% on the day, closing at $412 will say $1.5 per share, which clearly relative to the market is going to be a bit of an underperformance. Though the market is very flat, it is still green, particularly with regard to SPY up almost 0.5%. Therefore just now, what has this been for Tesla stock? Is this outstanding? Is this bad? Is it bearish? Is it in line with optimism? Whichever one it is. Next, where are we headed? Well, let us discuss that. Clearly the volume today was quite low by the standards. Let me see actually volume across the market. Nvidia's volume was rather low, AMD's volume was rather low as well. On SPY, absolutely. So quite low volume day, shockingly enough. Still, it is in an unusual posture. I will so present the ultra build case first then. Starting with what I think to be, the more pretty nice optimistic type situation, the fact that today's low was the low today. Today's low was the low. And we gather right from here since Alright. So one tactic I truly enjoy is consolidating a stock's huge rally like this. The bands become red, which they did momentarily, but still see ready here. Alright, then the stock gaps up, or just rockets past the bands, comes back in and starts regularly showing days. And days in a row of keeping above the bands. Honestly, I enjoy when a stock starts to perform this way. That's, generally speaking, nothing is flawless. Usually though, this is a positive indication. Not always is nothing perfect. That being said, assuming Tesla ideally holds today's low, but especially if it holds the low back on Tuesday, which is at roughly, 424.5, so between 424 and today's low at about 409, right, rough, couple or $3-ish range. As long as that general holds, I actually think there's a, argument. You could argue that today's low is the low and we rocket from here, and we just, rally back up to roughly 460 from here. You might argue that rather simply. Clearly that's the ultra bookworm situation. I am not stating that my basic case is that. That's not my basic case, hence I do not. A fact, I did enter some little position on that accidental basis. Here, I believe the risk-reward to be somewhat reasonable. Still, that's my ultra bulk case. Not my base case. Turning now to what my quote-unquote base case is, my base case stays the same as usual, correct? And that boils down to roughly 390-ish money per share for Tesla. I'm not sure when, nor if that will be tomorrow. I'm not sure if Monday will be it. Perhaps it will be post-performance, I'm unsure. Regarding timing, I'm not sure on it. I'm not going to try to inform you it will happen tomorrow precisely at 1159 p.m. I'm not sure exactly, none knows. That is my basic case study though. Again, I may still be that bear fly. My base case is a trip back down somewhere around here to hold essentially this rising channel that we are in, but, as long as this overall level holds, and of course we will have that yellow line here, the 50 EMA will be somewhat close as well as, in theory support here. And actually, eventually as long as that overall level of 390-ish holds. Alternatively, if you wish to be more precise, you can take the lows of these two candles over here, roughly spanning from approximately $380 per share, down to almost, 377, something like that. I honestly believe Tesla may perhaps come down here and get a really big balance, as long as that rough level maintains, and this really could be the lowest point for the stock. Then we get that rally, roughly 460 best case scenario. In my view almost $500 per share. Once more right now, that is rather my base case, right now. Once more, clearly the main grain of salt, that is, earnings. You know, if only theoretically. We have basically just a couple days worth of earnings approaching, on Wednesday of the next week. Naturally, particularly with Tesla stock and especially with Elon, you never know. Important, significant, major question mark. Apologize me, I am not going to pretend here. I'm not going to sit here and pass for like I know what's going to happen. You know, earnings movement, especially on a stock like Tesla stock, makes me not want to pretend like I could foresee. But, in my view, it truly depends on our approach into the earnings, so let us see. Clearly the day before, I will share with you my observations. Since then, we will know the direction the stock moved into earnings. Keep in mind, though, that is clearly the kind of main danger involved here. Income, particularly on Tesla, especially. That is therefore roughly my whole projection. The MACD remains flip bearish after all. You can see it somewhat here. Did a short retest and it seems to be rolling down towards us. Stochastic seems to be still in fine shape. They are therefore rather contradicting one another really. Thus we will see how that turns out finally. Still, it is quite dull. It can be rather dull occasionally. Sometimes things are not quite fascinating. But you have the stock essentially right there smack in the daily Bollinger Bands, like exactly in the middle, right? You have contradicting indicators like this. It is not very speculative, it isn't overly sold, it resembles death smack exactly in the middle. You know, sometimes these kinds of things take time to develop and allow you time to get a better direction. I am not thus entering any significant positions or anything similar. Personal notes here. Electron. As I mentioned, I did occupy a minor post at closure, mostly based on the ultra bull case notion, which absolutely can fail. Once more, it's not a big position, so I'm ready to accept a small loss for possibly a good return. Personally, I believe this to be a reasonable risk relative to reward. Not financial advice. But occasionally when a stock finds itself in a scenario when you have conflicting signals like the MACD and the stochastic, you find yourself creating up, essentially the channel here in the midst of the Bollinger Bands, less than. And right now, occasionally it's a patience game. You don't always force a trade, occasionally you let the trade approach you. And if you do, like I am now doing, like I am kind of doing right now, it is a little position, the very tight stop loss, which is basically what I am doing now, definitely. In this transaction I responded essentially at close, so let's see how this finally turns out, and let's see generally, looks, I suppose, moving into earnings? Of course wages are a tremendous, major question. Now once again let me say, Tesla completing the week below 415 would be a little bit of a concern, not a huge amount of concern since we did it obviously 2 weeks in a row here. Again though, the primary reason I'm not jumping up and down with delight is, I will keep reading this till it is no more the case. I'm not like, quite eager to get the dip and thinking like, man, for sure this is gonna rocket back up, people. If it's a possibility, I'll see you 500 next week. Even if it's easy peasy lemon squeezy. The reason I'm not, very certain in that and pleased about it happening, once more, mean reversion. I guess I am a mean reversion trader. Although I trade in several ways, one of my preferred methods is right here. On stocks, mean reversion is really strong. Usually, respect that thing if you're not aware. I will stress once more very fast. This is the situation where a stock's essentially too far away from its quote-unquote mean price, either up or down. Once more, the mean price is the reality that equities reflect. The premise is that equities zigzag in directions whether they are up or down, they can not only move up or down. This yellow, not yellow, white line right here, is the mean adjustment of the Bollinger Band when a stock is moving too much up in one direction, as we technically are right now in the weekly. This is roughly $330 per share. We still quite distance from it. Again, you can view it yourself, with a little reiteration, as I zoom out one more time. Every time we have strayed too far from this mean line, we have rebounded either up or down back into it and essentially reset, if you will, the stock. Every single time, same thing occurs on the weekly, same thing occurs daily, as we did over here. You can observe a large move up, effectively a short squeeze, and what should we have done?